Hey there, welcome to the channel. So it looks like crypto is really, really, really close to being done. All right, so we have FTX, one of these crypto exchanges, one of the darling of crypto, SBF, Sam Bankman-Fried. It looks like FTX has now declared bankruptcy, and their affiliated companies, including Alameda Research. If you remember, we had this chain of events going on. We had Three Arrows Capital and these loans going back, Voyager Digital, and these all these companies started, filing bankruptcies. And at that time, some time ago, I was pointing to like, hey, look, Alameda Research, Sam SBF's one of his companies, they had lent them some money, et cetera, like that. And therefore, I was like, hey, this could be the next target. Well, it turns out that, yeah, these are all together. So basically, you have the Sam Bankman guy. He basically, is the owner of these two companies, basically, and they're all kind of together. They're not really separate companies. And now FTX has gotten itself into financial trouble and has gone bankrupt. And along with Alameda Research, apparently, they're all gone. So basically, another one of the dominoes has now fallen in the crypto space, and it's done. Now, the next one to wonder about is Binance. So, went through this whole thing where, FTX is in trouble, but they're got a letter of intent from Binance to provide financing or to buy them out, et cetera, et cetera, et cetera. And basically, of course, that falls through. And there's all this other stuff going on with it behind the scenes and or actually in front of the scenes with it. But basically, it's done. Binance had backed out. And so there we go. Our crypto billionaire guy and his companies have declared bankruptcy. So one of the things we could look at here is let's look at some of the cryptocurrencies. So here we have the FTX token. So this thing has just gotten destroyed. But see, here's the thing with these tokens. These are just made up. These are just made up things. Didn't go anywhere. Build up the hype. Get Alameda trading it, other people trading it, get the attention. It's just an old fashioned. This is just a totally old fashioned pump and dump. You have something, you create something out of nothing, and then what you do is you just get the marketing going and you pump it up. And it was amazing how long this was able to hung on for almost 2 years, and now it's just dropped through the floor. Now it's kind of amazing that someone is still willing to pay $2.50 for this FTX token, but that is I mean, it's basically just done now. So the problem is that FTX tokens. So the problem is we have all these cryptos, and the big guy here is Bitcoin. And if we look at that just real quick, so Bitcoin, is getting beat up as well here, but it's kind of interesting because if you look at Bitcoin, same kind of chart. Nothing, nothing, some pops through the roof, and now it's breaking down. It's breaking new support. Like I had been saying this for some time on this thing that it really needs to hold this area, this 18,000 area, and it's now officially it's just broken right through. So this thing is going all the way down to 10K, and I wouldn't be surprised if it goes to zero. Now the so looking at it, we have the FTX. So basically, what's going on with these companies is the exchanges, these companies are just making their own crypto. So you have FTX makes their FTX coin, and then they basically try to create value in it, and it's just all a pump and dump. There's nothing to it. There's no value in this coin. It's unbelievable that someone would have actually back here was paying $70 for one of these coins. It's a rather amazing thing. So the dump part is now in play. But here's the thing: we had this whole issue come about where like Binance was made, talking about buying FTX, etc., and they back out. But here's the thing: this is now my speculation, and this is going back to my original speculation. It was like, hey, look, Alameda's in trouble. Alameda has a gave money to the whatever it was called, Voyager, et cetera, et cetera. So there's some relationship there, and they're the next to fall, and they've fallen. Okay, the whole thing, FTX, Alameda, it's all gone. Now let's take a look at the Binance coin. right now this buying so this is sort of an insane thing. It's like you have a company and you create your own coin, you make it up out of nowhere, and it's an amazing thing that somehow Binance has created their own coin and it's traded as high as 600, almost $680 a coin. That is a rather amazing thing. But I think the important thing to understand here is that, look, crypto is done. All crypto is done. There's nothing there. There's nothing underneath those coins. So Binance is going to fall. Binance is the next one to fall. So I'm not giving you financial advice, but if you're sitting there and you actually are holding on to some of Binance coins, you need to get the hell rid of it. Because if you think that Binance was going to be able to save FTX, and if you think that FTX, the big guy, is now in trouble and it's bankrupt and it's done, do you think that Binance is in any other difference, has any other difference to it, any other difference in their business model that materially changes it? No. What does Binance have? I'm sure their balance sheet is full of Binance coin, which is worth nothing, absolutely nothing. What was FTX token worth? Well, someone, it got up to a hype of 70, but it's worth nothing. It's worth absolutely nothing. There's nothing there. And in addition, let's go to the big guy. Bitcoin's still hanging out because Bitcoin at least isn't associated with one company. However, Bitcoin is also worth nothing, not a single damn thing. It is over. So, how do we prevent ourselves from getting caught up in this kind of stuff? So, the question is, how could we start to get a sense that the thing we're investing in is is a scam? And I'm going to use that word scam. I mean, I'm not mincing words anymore about crypto. The entire crypto space is nothing but a scam. Okay, very clear. It's nothing but a scam. That's all it is. Okay, so how can we get a sense if we're getting involved in a scam? One of the key pieces to look at is the thing you're buying, does it produce something tangible? And it has to be tangible. Okay, so for example, if you're out there and you're investing in a company and you're investing in Tesla, okay, so Tesla, you can see that they make something tangible. Okay. They make cars, they deliver cars. They may be very overvalued. Okay. That's all fine. That may be true. But at least there's something there. They're doing that. You could look at a thing like Microsoft. Does Microsoft produce a product? Sure, they have some, but they're mostly software, which is a product, but also there may be a services. That's something tangible that people pay for. So that's the first sign. When you look at it and you're looking at a company, at a coin, and you're paying for a coin, what value does it have? It doesn't have any value. So that's the first sign. There's nothing tangible underneath it. There's no tangible service. There's no tangible product underneath it. Even the big banks, you could look at a bank, a Goldman Sachs or something. Well, what's tangible? I mean, they're just playing with numbers and a digit. Well, true. But on the other hand, there is something tangible. They do make loans. A lot of the loans, I would debate the productivity of those, but a lot of the loans are to companies that are building real tangible things. Okay. So that's the number one thing that, to understand, you got to figure out where is the tangible thing. And then at least if you're betting on something that has a tangible thing, then you have at least you have a chance. So it's pretty amazing that we've gotten this far with crypto with just, I don't know how we don't realize that there's nothing underneath. Now, the next thing to look at is promises that are just not realistic. When you look at the crypto and you look at what they were offering when they were talking about you could loan your crypto out and they would offer you 10%, 12% return, you instantly have to look at that. So when you look at an interest rate, this is like a really important kind of litmus test for what's going on. If someone's telling you that you don't have to do anything, you just deposit some crypto and they're going to pay you 10%, you have to ask the question, how are they making the 10%? And then if you look into the guts of a crypto, well, okay, it's crypto, and then how are they going to do that? You should realize that there's nothing there. There's no way for them to give you that 10%. In essence, it's a Ponzi scheme because what can they do with the crypto to generate the 10%? Because at the end of the day, the crypto, there's nothing tangible underneath it. There's nothing tangible you can invest in with it. So how are they going to give you 10%? And so, 10% is a lot. If you give them $10 every year, if it was an annual rate, you're going to get a dollar back. Well, they have to give you that dollar. Where are they getting that from? That's a red flag. It's a huge red flag where someone is over promising. Now, I have been involved, I've been taken advantage of in this concert promoting scheme from many, many years ago. And that's exactly what they did. Exactly what they did. They were like, hey, we're going to promise you a 15% return on your money. And all the usual deal with the scam is like, okay, you do a test, you like take your money out, and it's like, oh, the check clears, everything's good. Okay, well, it was really not the money that you earned, it was someone else's money. So, really, the interest rate is a key thing. And so you have to put yourself in their shoes, right? Imagine that you borrow $10 from someone and every year you got to do $1, and multiply that by millions. So, they gave you 10 million. Oh, great. Well, you have to find a way to use that 10 million productively to give them a million back every year. And if there's nothing underneath it, then there's no way that you can do that. Now, if you flip over and say you're Tesla and you borrow 100 billion and you need to return a billion in interest on that, well, first of all, that's really, really, even there, it's really hard to do. But at least there's a way that you can see it. It's like, oh, we're borrowing the $1 billion from people and we're using that to expand our plant, expand production, which allow us to sell more cars, sell more stuff. And hence that's how we're going to pay you back. Right. So interest rate is a really key thing. Generally speaking, you look at the 10-year, and this is your risk-free rate. In other words, when you're looking at the interest rate, like for you give money to the treasury for 10 years, this is the rate they're going to give you, right? And so this is in basis points. So this is right over here on the top is 4%. We're just below at like 3.8% right now because we've kind of gotten hit. When you're in an environment where interest rates are very low, where interest rates are on the 10-year are like back in here. So back in this whole period of time where all this stuff is going on with crypto. So I just want to highlight it. Yeah, in this whole time where I mean, crypto is recent, but you have to understand this is 2%, right? This is a 2% interest rate on the 10-year. So how is someone so kind of just drawing that line 2%? So when all this time, when all this crypto stuff has happened, and remember, a lot of this crypto stuff happened back here, where interest rates were more like 1% on the 10-year. Okay. So the point is, how when the government can only give you 1% return on a treasury, how is someone going to give you 10 times that, give you 10%? So when you're out there and you're looking at that, you have to really look. That's the red flag. The red flag is they're promising you too much. They're promising something that it's going to be very difficult for them to deliver. And so when you have responsible companies, they can't promise you that stuff. What they can do is say, hey, look, this is what our plans are, this is our best estimate of what we're going to do. And then you look at how they performed in the past, which is not always a guarantee of how they're going to perform in the future, but then you have a kind of an idea of what they can, whether they've been successful. That's why, when you look at companies, they're so focused in the stock world on, the management, because hey, do they know what they do and they know how to deliver, or do they not know how to deliver? So that's a key red flag, because how do they promise those rates? They can't really do it. Like you have to be able to look at a mechanism underneath the crypto lending industry and say, well, how did they give you that money? And there is no mechanism in any way. The only mechanisms in there were massive amounts of leverage or paying you someone else's money. In other words, a Ponzi scheme. And so Ponzi scheme, very simple. Ponzi scheme, you got to keep building it up. So, as this thing is going up, it's like, people are adding, more people are putting money in and they're putting money in. So you go to take money out, you didn't, you gave them $10, they're giving you $1 back, right? But it's not like they took the $10 and they made a widget and they sold the widget and made money. They made $12 and gave you one of the $12. right? So, for example, a widget and they sell it for $12 and they say, okay, they keep $1 and you get $1. Okay. So that would be like a really great thing. But that's not what happens. What's happening when you're looking at that is you give them $10, they give you $1, right? But they didn't earn it on this. What they did is they have the next guy giving $10, next guy putting it on the pile, right? The next guy putting it in the pile. And so they took from there to give you the dollar. So when they run out of new people coming in, that's when the Ponzi scheme goes belly up. That's what it is. So it's very simple. So if you can't understand how the company's making money, you're at risk of being caught up in a scam. These tokens that were created, there's nothing there. It's over. Crypto is done. And I can tell you, if you think Binance is going to survive, I think there's no way in hell they do. They're the next one to fall. That's it for this one. Bye.